Hello, so welcome everybody. So today we are going to look at how to invest in shares in Kenya. So welcome to the professional training deck by Peter Kivole. So I would like you to subscribe for more videos on the same. If you haven't subscribed, just hit the subscription button. As we're going to share more videos and more content about about shares in Kenya. All right. So our training objectives is that we are going to understand what shares are and stock markets. We're going to learn how to invest in Kenya. We are also going to identify risk and opportunities. Our last training objective is that we're going to build long-term investment habits. Yeah. So the first one was about understanding shares and stock markets, learning how to invest in Kenya, identifying risk and opportunities, then building long-term habits. So what is a share? I know you have heard about shares, you have heard about equities. Yeah. So a share is shares are just equities. Yeah. They give you ownership in a company. This is where companies they're able to share their ownership through the public. Yeah. A share also entitles you to profits that the same company that you bought shares from, you're able to get a profit. A share value changes with performance. Yeah. So we're going to look at how money is made, how you're going to make money from shares that you buy from these companies. We have Safaricom, we have the East Africa Breweries Limited, we have Kenya Power, we have Equity Bank, we have KCB. So those are some of the companies that you're able to buy shares from. So how do you make money through shares? One, through dividends from company profits. Yeah. So at the end of any financial year, when companies share their dividends, so if you had bought shares earlier, you'll be able to get dividends from the profits that that company makes. Then we have capital gains from price increase. Yeah, so you're able also to make money through capital gains. Then we have bonus shares issued. Yeah, I'm showing how you can make money through shares. Then we have an elephant in the room called the Nairobi Securities Exchange. So this is the main stock market in Kenya. This is a platform. It is a platform to buy and sell shares, and it is regulated for investor protection. So I'm going to give you some tips before you start. One, you should start small and grow. Yeah, don't invest so much money in shares yet you haven't made some thorough analysis. You haven't studied the companies that you want to buy shares from. The other thing is to diversify investments. Yeah, diversify investments. You can buy shares from telcos. Then you diversify with another company, maybe the banking sector. You can decide to buy shares from Safaricom as a telco. Then the banking sector, maybe Equity or KCB. Then you need to be consistent. Yeah. So whenever you're investing this type of investment, you need to be consistent and you think about the long term. So we're going to look at some of the some of the risk. So the first one is market volatility. Yeah, so you find that there's sometimes the value of shares increase, sometimes it falls down. Yeah, so there is a lot of market volatility in the capital markets. Then company underperformance. Yeah, so for you to buy shares, you need first to make sure that you have analyzed the company that you want to buy shares from. Yeah, so you need to look at the liquidity ratio of that company, any debt that that company might have. Yeah, so company underperformance is a risk, so you need to be careful. Then we have economic changes. Yeah, economic changes uh, with factors such as inflation, uh, political interferences. Yeah, then we have emotional investing. So before you invest into these capital markets, you need to make sure that you're not just led by emotional, but you should uh, you should invest after thorough search of these companies. So what are some of the common mistakes? One is lack of research. Yeah, and two, short term thinking. So you need to think about the long term. Yeah, so that whenever you go at the so whenever you invest, you think about 5 years or 10 years to come. Yeah, then there's that following hype. Oh, you're doing this because somebody is doing. Then the other thing is about diversification. All right, so the conclusion, you need conclusion: investing builds wealth over time. Investing builds wealth over time. Yeah, so you can decide to go a long term. It's wise you go long term. Yeah, then stay disciplined. You need to stay disciplined so that ukiona shares imepanda, you want to withdraw, or maybe imeshuka, you're scared about your money, you will end up losing your money. Then the last one, you need to keep learning, keep learning. Yeah, so thank you. So welcome to this channel. So whoever has not subscribed, subscribe for more content. Welcome.